Hello guys, glad to have you on board again. Today we're going to try covering up the major asset classes in a swing perspective, talking about Bitcoin scenarios still ongoing, talking about the post-Fed movements we've got throughout prices. And today's topic is going to be, yes, we do have some hesitation surrounding the indices. Pretty much the SPX want to do historical highs without absolutely not a goddamn reasons to do so. The dollar is seriously going down, and that's exactly what I was expecting. So I think equities are uninteresting at the moment. They feel pretty dumb to me. Like technicals are secondary. I don't know who the fuck is trading those assets, but they're definitely not professionals. So I'm just going to let them aside, set them aside for a little bit until they get back to some more rational behaviors. But the Forex instead is a matter of professionals, and in here I can definitely see that there are huge price allocation movements, huge monetary aggregates movements coming ahead, and further getting to potentially further validations. So we'll see about that, but anyway, if the smart money is moving things around and probably moving things out of the US, then it simply means that they are forecasting the recession that the bond traders have seen a little bit earlier. So to me, it's just, once again, little pieces, little dominoes that I've been forecasting for months that are just falling one after another. And I see the bigger picture. Some people don't. That doesn't even nearly mean that I know what the hell is going to happen. I just see a pattern, real dangerous pattern, in which generally we end up with a recession. So anyway, cryptocurrencies first. So the Bitcoin managed somehow to find its support and to maintain its bullish support over the 9K area, which is the previous highs basically. So instead of falling through this, and we could have done this, all right, we could have just triggered the speculative crash right out of this. We didn't. The bulls are in control. Great. But we're going to have to see what I was expecting, which is the next bullish, the next bearish demand area, which is 9.6K approximately. If I do have 4-hour signals in there plus a price confirmation, I'll definitely go down this road. As for now, we go for a range. This range is mature. It's a 15-minute range. All right, so bam, 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 false contacts. Now we're heading toward either accumulating and bullish breakout, all right, or this is just, and that's what I think, this is a pullback. So whenever this is a pullback, you don't look out for accumulations, all right? When this is a pullback, all you care is to look out for a final excess, all right? So more likely breaking through the context, trying to trade this area, exhausting, and bang, there. And afterwards, we reintegrate the range and we bearish break it down. So that's the thing I'm forecasting. That's what I'd like to see. Obviously, I'm going to wait for signals to do so, which means this 15-minute trade, I'm not going to take anything in 15-minute time frame charts. But most likely, like I said, it's going to be pretty much 4-hour signals to me. Overcoming this context, trying to find some strong bearish resistance in here. It is definitely going to be divergent. So there is going to be a signal. I see absolutely no reason there's not. So there's probably going to be a divergent signal. So anytime the momentum is heading downside again, with prices confirmation on top of this context area, definitely think that this is what may cause some strong reversal. Obviously, the validation is whenever we'll go back to this range, all right? We need to reverse in here, trade back in the range, and break it down. When you have this, you know the trade is validated, and the speculative crash will come right after. Meaning all the bulls have been buying, and buying blindly. Because that's the problem with bulls, all right? In order to support price, they need to buy again. They need to buy and buy and buy and buy. And what happens when you buy? Right? I told you that already. The thing is that when you've got those kinds of stuff, all right, you can buy, but even if the guy just bought in here, right, he bought the breakout, bought this breakout, right, he's buying the accelerations, all right, buying in here, all right, just this, all right, the guy, and the guy obviously bought in here, it had to, all right, it's buying anytime we break something, all right, so build a range, is buying the range breakouts, all right, so let's assume this is the 3 prices the guy may have paid, all right? Now, if he done it great, this is its average price, right? Like, this is almost what he's got, right? If it done it by increasing the leverage, what most people will do, okay, first trade, you dip in a toe, you think all right, there's maybe a trend, you don't yet know, oh great, there is a bubble, so I can go all in. So you're taking bigger position sizing, which means your average price is most likely there, all right? What's going to happen when we're going to trigger the speculative crash? We're going to go straight for this guy's stop losses instantly. So what this guy is going to be doing, 99% position in position time, nice gain, the guy is confident, you think he's under control, you think he understands, you think he's good, you think he's making easy money, great, all right? Then you've got professionals like me, I'm going to be proven wrong like half the time, right? Because I started selling in here, and yes, so far I'm wrong, but believe me, I'll be right in the end, and I'll make money, and the guy who bought will probably not. So that's the problem, all right? You need to do things smart, because it's not about right, wrong. Yes, so far I'm wrong, and yes, so far the buyers might be right, but I know how it ends. So if you bought, you're right, then make sure you're not going to turn into a wrong. Once again, you don't cut the win trades. Some people, I try to teach you guys, when something goes well, you don't cut it. But when you had a bubble, there is an end. And if you don't put an end to it on your own, if you wait for prices to go down, it will go freaking rapidly down. And almost instantly, most of your gains will vanish. And the problem is when this happens, when you had nice gains, you got used to see those gains. When someday they start to vanish, you'll end up with a very dangerous feeling that you think it's going to go up normal again. And you're not going to cut this. You're going to start reaching negative prices, which means you start losing money instead of winning, and you just turned a nice bullish trade into a stupid bearish trade into a stupid bullish trade that you are going to transform into a buy and hold. And yes, you're going to be there saying, all right, know what? I'm going to buy and hold. All right, I'm going to buy and hold. Yes, and we're going to go 5.6K. You're going to say, all right, no worries. There's going to be a strong support in here. I'm going to buy and hold. All right. Yes, probably there is going to be a support, but the support is going to act like this. Like instead of, oh, nice bullish support, V-shaped structure, you're confident. No, it's not going to be like that. I think we're just going to die in here for so long that you're going to be desperate at some point. You're going to say, oh man, maybe I shouldn't have bought and hold and stuff like that. Or I'm going to probably tick one more to the downside just to make sure to finish any any positive bias you could have. All right. And there, what's going to happen? You took a trade, you took a nice trade, you were so right, but still, as you got blind, you were like 7.2K average exposition, and you're going to surrender those Bitcoins to 4.7 or something like that. You're going to take a stupid loss because you took a stupid trade in the beginning. You traded a stupid bubble without a plan, and most likely your mistake is not to trade the bubble. Your mistake is not to profit take on this bubble. If you think it's going to go up forever, oh my goodness, no, it isn't. That's not how bubble works. So anyway, does this still work like a buy and hold? Yes, definitely. If you bought and hold those lows, there's not even a problem. Let me show you what the volume profile looks like. All right, because we now know this is a bullish trend. All right, we definitely got the bullish trend structure. So you can use your fixed range profile. I mean, just look at that. Where the fuck is the volume in this profile? All right, what we're doing here is for dumb traders. So this is where the smart money traded. This is where the dumbs started to take it over. This is where the dumbs are exhausting themselves. All right, they're just buying and buying and buying. All right, let them buy. We will retrace this almost entirely. We're not going to go there because that's what we call a selling tail. All right, so when you volume profile this area, you know this, we're never going to get there again. This is where the smart money bought. This is where I bought, and we're not going to go there and there again. What we can do instead is retracing down to this area, which is 4.6. And as you can see, there's a big range. Remember that ranges always come up with always the same technical information. All right, there is a switching area. Where there is very low volume. This is where we broke out of this volume, and you'll see this. All right. So sorry, it's not that I like to paint dicks on my charts, but sorry, this one looks like a weird dick. So anyway, that's always what it looks like. All right, like a triple structure. All right, tiny boundaries. It's the resistant cluster. This is the dumb area and the support cluster. So now think it out loud. Think it straight. Where the hell do you think this thing is going to be bought? Right? I can definitely tell you what I think is going to happen. Right? I don't know for sure, but we're going to spend a shit ton of time in here because there is a strong lack of volume. So I very much expect that, yeah, what's coming next is something, oh, sorry. It's pretty much something like that. Let me just delete the content text. All right, pretty much something like, all right, we're going to die in here. All right, this is going to be our new dump area. We're going to spend quite some time. Volatility will reduce. Right, and bam, we're going to go there, straight to the bullish demand area in here, and then here is where you're going to restore the bullish prices. All right, this I think this is pretty much what we're going to have. Right, then back to low volatile area. All right, and eventually some bullishness to reactivate again. All right, so yes, buy right now, buy right now. I'm going to take your losses. So anyway, no, I'm sorry, that might be way too pretentious, but the problem is I know my job and I know how significantly probable this scenario is, simply because all we've left behind, all the trails, all the little tips that professionals do take advantage of, I can definitely tell that we're going to retrace to this area. I know that you might think it's not going to happen, that we're not going to go there. I can tell you, like, it's a 75% chance that we go there. So that doesn't mean you can risk the house on this, because I mean, if we end up with the 25 remaining percent, you're fucked. But still, I have very strong confidence. I rarely tell you that. All right, I rarely go down this road of being overconfident and stuff like that, but I can definitely tell you something goes wrong in here, and everything I have in front of me just confirms that. Very inappropriate volume management throughout this trend. Lots of volume in the bottom, like it acts like a magnet. We're not going to go there because there's way too much volume concerning the rate, the remaining part of this profile, but there is a strong volume area in here that we're going to have to retest. And it's a range, which means it's probably going to be traded, and probably we're just going to shortly, but very interestingly, demand the support bullish area. And by the way, I think it works kind of remaining and letting the visible range, the fixed range areas. So yeah, give me a second to do it again. All right, let me just, so we've got high volume node in here. Going to be red. Sorry. All right, I got this one as well. These are the two big volume areas, and this is where the bullish demand area is. So this one, I would say it's a strong bullish. We go there, I'm definitely buying the shit. All right, so this is where we get into the support cluster in the range. All right, support cluster, and this is where we got volume in the support cluster. All right, so just bear that in mind. It's for you to know. Probably gonna have early support in this area as well, but this one is probably not gonna last long. All right, so we're gonna test this one, probably a rebound, but we're gonna break this one down. We need to break this one down to open this area. All right, so we'll see about that. All right, just we keep information, we keep the trail, and we'll use it later in time. That's for Bitcoins. Now let's go to the Fed and the stock market. So have a look at this. Wow. Historical highs for Wall Street. Out of what? Nothing once again. So what do we do with this? All right, how do we deal with that? Yesterday's session, the cashing session, which means the real market, right, the real money, didn't give us any single information. We closed in the gap, but now, today, the market decided to go bullish. Like, we want blood. We want to go there because the bear stop loss are way too close. That was the plan. I told you if they manage to go to this range, they'll probably to fill the gap. They'll probably just do the final step that is too close not to do it, just to fuck up every bear's remaining, just obviously me included. So I probably got all my trade. Yeah, I mean, I think my last trade has been stopped as well. So this one has been stopped, this one has been stopped, this one as well. So my 3 bearish swing trades are now out at break even. Good job, bulls. You putted me out the game once again. But does that mean I'm surrendering? Not a goddamn shit. I'm still here. I'm waiting for you to do some stupid mistakes. So I'm waiting for risk management to sell again. I think we're going to go historical high. What I would like to is for us to test this area and reject again, just like we did in here, right? Everybody was like, oh, bragging themselves, historical highs, we're going to be there, it's going to be bullish, there's not even a chance that we fail. Look at that, we nicely failed. So how about we do it once again? We go there, we try to go historical highs for a day, and then tomorrow we fuck it up. So that's exactly what I think is about to happen. Like, we just go there to fuck the bears because that's just what the Fed wants. They doesn't want to have safe bears, because safe bears means people who will reinforce their trades, which means people who will start short selling the market with big position sizing. So the worst case scenario for them, they just want us out. So by being out, they just pushing us again for further away in time, because as they manage to make higher high, they know that they prevent us from bearish breakdown. But still, there is a big problem. Risk is rapidly increasing in the same time, which means black swan can show up at any fucking time. And the black swan will fuck up each and every of these big promises that the Fed is holding up, that we do have higher lows and higher highs. So that's the sign of a bullish trend. Yes, when the fundamentals are bullish, they're not. So there is a big problem in here, right? We had huge tensions, geopolitical tensions, market tensions, macroeconomics not really improving. Like, we might have a little rebounds lately in which some Feds have been just slightly increasing their growth expectation for 2020, but still, I mean, oh my goodness, yes, we might have just rose a little bit of those expectations, but we definitely sharpened them, divided by 2 since it was like a year ago. So what the fuck are we doing historical highs when we basically dampened half of the expected growth? So there's something that doesn't go along in here, and there is still the same old problems. Who the hell has been buying yesterday once again? The same old stupid ETF traders. So who's buying ETF right now? Definitely not professionals. Professionals are doing stock picking, and they're hardly doing this because it's not easy at the moment. But still, these are the dumb traders who bought it all. And what we can have in here, yes, obviously, new record on ETF volume demand. All right, so way more volume getting inside ETF than getting outside ETF. You can also see this oscillator shifting up one more time, which means ETF is rising faster than the stock market. So these guys are more aggressive than the actual reality, which means the actual pricing we have, at least the current pricing. So these guys are anticipating a bright future, and there better has to be one, because look at how crazy fucking bullish they are, and anytime we've gone there, always ended up with a reversal. All right, so we're as crazy as we've rarely been in the past, and this is a long-term fucking chart. All right, and I hope you have to look at this long-term. At least we're looking at many years. So just see this and how breathtaking this is. Everybody think everything will be right, everything will go according to the plan. I don't nearly even think we do. And let's be honest, I don't really think we do. I think something really ugly is going to show up early July, like we said. I think we still have one more week in which we can try to safely trade historical highs, and then I pretty much expect something is going to go out of control. We're going to restore the parabolic scheme structure in the VIX. And so, yeah, I would say just a little matter of time before we get to the next volatile burst. Remember that they happened, each and every one, rapidly earlier than the previous one. All right, so in each and every time you've got a volatility burst, it just gets rapidly, it just gets faster than the previous one. So we're in a parabolic scheming structure with time, which means we're short-terming the vision and short-terming the vision and short-terming the vision until we're gonna have to pay for what happens in the midterm, which is just a recession coming along the way. So as you can see, Wall Street's taking highest level of risk, buying riskier bonds, buying stupid assets. Like, it's always the Nasdaq who's profiting. So they're buying the riskier assets, right? But still, what happens in the opposite way? Buying gold. All right, so something definitely doesn't go right. There is just like a bipolar market, and I cannot nearly understand what the fuck is going on, because I think the traditional risk managers, they're all heading toward recession trades, so they're putting money into safe havens like the gold and stuff like that. And you can definitely see, I mean, look at gold, weekly fucking chart basis, we're breaking through this range, and that doesn't even concern any fucking one. and it should be a concern. The gold breaking up is not a good sign for the Fed. The USD JPY heading down, it's not a good sign for the Fed. But still, they do anything they can. So what do? They maintain equity and risky prices inflows to make sure that they don't collapse. But you cannot have both the risky asset and both the safe haven rising in the same time. It means someone is lying in here. And I stand on this. I've been standing on this for the first day. I know the lawyer, because I can see even more movement. And just a few days ago, just after the Fed, another of my dominoes has just fallen, which is now the Forex is giving us the sign I was expecting. We've got a bullish momentum on the gold. We've got bullish momentum on the yen index. We've got the dollar falling like shit and about to give us some pretty nasty bearish signals, which means they might try to reverse. They might try to do anything they can to put it back in under control. But the problem is there, and the problem is going to be hard to reverse. The dollar is no longer a good currency, which means we had a problem with the bond traders. We're selling, we're reversing the yield curve. So we had a reverse yield curve, which means problems with the bond pricings. Now we do have Forex traders getting out of US only and US first and US is strong and whatever the shit they're trying to sell. So there's just one remaining stuff I had to think. People getting to safer assets. I definitely see this with the gold. Still needs a little bit of confirmation with the gold, so don't be too aggressive right now. All right, we're entering resistant context, so it's a tough area, and I'd like to see it pulled through to make sure that there really is a trend in there. But if there is, then it's another domino that will fall. And the last one is just the riskier assets, who are just, to me, it is a big problem, because what I can see is that there's still this invisible hand, or call it however you want, that's doing anything it can for the riskier assets not to collapse. But the problem is the price structure is very low volume supported. So this thing is a very dangerous game, because it has two options. Either we create speculative, it has two going out of control options, all right? It really needs a very tight management to maintain price, not to be bearish, but not to be bullish, because when you try to fuck the bears, at some point the bears will just stop trading, which means no bears in the market is the full open door for a bubble. And if the Fed ends up creating a bubble, then they just blow up the entire US economy, because you guys will not survive a speculative bubble burst with a credit crunch. You are the most in-depth people in the world. And oh yeah, you might say, no, what the hell are you saying? The US is not the most in-depth country in the world. It's the Europe. Oh, the bad European people with their debt. And just, I would say, look out for yourself first, and then you'll tell me, all right? Like I said, QE was $80 billion a month. Yes, that's good. You guys are costing $10,000 billion a year. So who's the most in debt? That's you guys. I'm sorry to say that, but since you got a tax plan, you're freakingly credit negative. So yes, the problem today is the US. They don't nearly even see this one coming, but you guys are the big problem. You're definitely going to create the next financial crisis. So if you think this is the euro year collapsing, that may create a collapse from the price, from the asset classes worldwide and create a financial crisis, I can definitely tell you it's probably not going to happen. All right, next crisis is going to come from the US, just like it came from every fucking time since the last, it's coming for a long, I would say 50 years. So anyway, so that's my problem. Still the same problem. I cannot see both the riskier assets and the safer assets rising in the same time. It means someone is lying. And I'll pretty much then say the technicals, which means probably the professionals, are trading safer assets. And on the opposite side, I see the riskier assets traded aside from technicals, aside from any risk management. So they might be help to go along with the invisible hand, or, all right, they are supported prices, all right? But who are trading this? Most likely retail traders. So I see retail traders supported by some magical invisible hand that does anything it can to fuck up the technicals from bears, all right? But anyway, I see a market that doesn't behave like a normal market. So something is altering this market, and my history has proven me that anytime it happens, it always goes out of control at some point. So I'm basically patiently waiting for this timing. Whenever these guys trying to put the market always up and never down, at some point they'll be wrong and they'll have to pay for it, which means we're going to double down instead of moving up. Anyway, we'll see this further in time. My topic today is definitely about Forex. So I'm now fully leveraged on everything against the dollar. I'm fully leveraged euro dollar, fully leveraged GBP, not yet fully leveraged USD GPY, but I've reinforced a little bit. Fully leveraged USD CAD, and this one is freakingly a big gainer. Look at that, bang. Where's the next support in here? In here. So this one is about to trigger a freaking long-term trend. So yes, USD CAD, I'm all in on this one right now. No, sorry, not all in. I'm never going to be doing this. If you know me, you should understand that. But have a look at this momentum. All right, we're pretty nasty and ready for a nice bearish oscillation, bearish price and momentum along the way. So we're definitely going to fuck up some supports. So this one hardly going to be supporting prices. I think we're going to go straight for the support context. So depends how fast we go and or how long it takes. But I pretty much expect that the next stop is in here, like 1.24. We're going to have to risk manage when clear nearly this previous low, but it's a straight line in between. I see hardly any possibility for us to reverse. NZD and CAD just a little bit reinforced, but not too much for now. AUDNZD, I told you to watch out for this one. It's been breaking support, reaching out to the first profit taking, so the first possible entry area. No 4-hour signal. Worse than that, we've got a target in here, and I pretty damn expect that this is where we're going to go. Not now, all right? We're not going to go there from here. If we break out this channel to the top side, I'm definitely reinforcing, all right? But I think we're just going to die out here for a couple weeks, and probably early July, I'm going to get a trade close to this area, close to this target. So waiting for the AUDNZD. I need further informations. All right, but the dollar, I think this is the problem. We do have a breakout structure coming along the way, 4-hour breakout, so it's not a tiny breakout. So remember, we had the bearish bias in the range, bearish bias once again in here. All right, context channel, trend channel, context channel. You know what the hell that means. That means a breakdown is along the way. We're gonna fuck up the moving averages on the dollar, so you may expect some more bearishness coming along the way. Same thing goes in here. Whenever we break down the support, there is not even a chance of support by breaking until we break down the support, and I think this is where we're gonna have to target some first profit taking, and I'm not even sure that there will be such thing happening in here. All right, so I think first stop is in there, and if we're lucky, we'll find a little bit of support, like probably some sideways action, not even retracement, but I think we're just going to go straight lining for weekly trades, which means this hardly going to provide any support. We're in a range, all right? So we're going to fuck up this support trend, and we're going to go straight to the moving average, the context, the support context area. So I think the next stop for this trade is in here, all right? And that's a huge deal. And once again, have a broader picture. I don't even nearly think that this will stop us. This is a trend channel. I think the next stop is fucking up the context channel in here. And if you're lucky, the bulls will find some support in here. If not, then we're going to have to break down this low. You have your negative tops. We're in a bearish range. So unless the bulls manage to find some strength in the context, that's a possibility. There will be a risk management in here. If they fail, then we're going to go new lows. And that means the dollar is under huge problems. All right, so once again, if you think the US is strong, US is first, US is whatever shit Trump has been trying to put in your heads, then no, it's not. And there are pretty significant signals suggesting that, yes, there might be one invisible hand doing anything it can to prevent this scenario from happening, but from what I can see, there's even more volume, even more professional activities and speculators going against them. So people are trying to fight it back, all right? But at some point, it never ends up well, because those guys are clearly manipulating prices, but the market is all about reality. Is all about pricing, but at some point pricing cannot go as far as they can from reality. That's the problem. Reality always catches up on you. That's what I teach you. That's what is written on the PDF manual. That's what I hope you guys understood. All right, you can do shit. You can do gut trading. You can do 50% gain. You can gamble. You can be a successful gambler. But the difference between the gambler and the trader is just, I know reality always comes back. And what I do is that I take profitable scenario out of what the reality showed up. All right, when I trigger a trade, it's like I said, it's just like throwing a 6-sided dice. You never will be able to know what the fuck the number will be. It can be 1 to 6 with each chances for each faces there is on the dice. But still, the reality is that if you throw 1 dice, yes, that's chaos. You don't even know, and you would never have to bet your life out of throwing dices. But if the goal is to throw the dices like 1,000 times, then you'll figure out that, yes, no matter you like it or not, yes, each dice is each chance for each face, but if you throw it 1,000 times, you'll see that the reality catches up on you. You'll get distribution equally, almost equally to each face. Yes, because that's how reality works. And like I said, those guys can be parabolically risk-taking, thinking they've got everything under control, thinking they can manipulate the market without problems. You know what? The reality is going to come up for them. That's simple as that. That's how it works. It's just a matter of time. I don't know yet. All I can tell is that I'll be right. In the end, all I do in between is that if you think I'll be right, so I'm selling and I'm holding my selling entries, no way, you're not going to be right, because these guys can prove you wrong so many times before you actually end up being right in the end. And if they take your money, then you won't simply have money to trade the last time, the one you'll be right. And that's not what I'm trying to teach you. You must want to be there the day it ends up going out of control, all right? So anyway, we've got monthly bearish engulfing coming right now, and probably I expect a quarterly bearish structure confirmation. The quarter is going to terminate out of June, so in a few days we've got the next quarter starting over. It's going to be July. We've got a brutal rejection in here, so you can expect some quarterly reversal in here in the Forex with lower highs and stuff like that. It's like I said, pretty much to me, next target is in here, and I think we're going to have probably an entire cycle to spend in here, so you can expect probably 15 candles, 15 quarters of bearishness for the dollar. All right, so 15 quarters. Just think it straight. How much that makes. All right, that leads us in here. So minimum is going to be 12. All right, so 12 leads us there. So it leads us to July 2022. So bearish dollar for 2022. You better hope that U.S. economy is going to recover fast, because from what I can see, it won't. You're going to have a bearish dollar for months and for years. And like I said, some people are saying U.S. is safe. This is where you want to put your savings because the dollar is so strong. I would pretty much say, all right, you might want to double that. You want to think it twice before putting all your money into dollar. Because yes, it's a possibility. It's also a possibility that this is going to be the worst case scenario for the US. They're going to lose the international dollar transactions and stuff like that, which means it's going to bring some volatility out of a currency that most people won't be able to repay, which means so much of the debt in dollar is outside the US border. All the emerging countries have tremendous amount of debt in US dollar. If they decide, all right, you know what, we're not going to reinforce the debt, fuck you. This is what's going to happen. Let's be honest, all right? If we go recession worldwide, some countries will just say, you know what, fuck you with your dollars. Now we've got other options. We can ask credit everywhere. So yes, fuck you. We're not going to pay the debt. So when everybody is starting to dampen the debt they have in dollar, which means not repaying it, that ends up destroying a shit ton of money. That's deflationary system. That's the reason why I think there is a deflationary risk for the US dollar. They think they're strong, but they've been basically pissing off everyone in the world with their dollars for years. If we can destroy it, you can be damn sure I will be the first to do it. All right, the international dollar is an advantage. You guys should never have had such thing. I would say you're lucky to still have it, but I think this is about to end. And everything has an end. And I'll suggest that, yes, the international dollar transaction probably the next thing to fall, and it's not going to be a good news for the US. So that's the trading scenario I have. Once again, I didn't trade that without signals. Future will tell if I was right or wrong, goddamn shit. But I think if it's about to be wrong, I think it's about to turn out to be true and validated in the forthcoming weeks. That's the reason why I was so dedicated to dollar recently. Euro dollar, it's been a pain in the ass. It's been definitely. But I think it is about time to go fully leveraged on those ones. Bye guys. Have a good weekend. See you again in Monday.